Hey there, everyone. Welcome to my inaugural release of my video newsletter. As a veteran mortgage lender and financial advisor, I look forward to dropping for you regular quick hits on what's moving the market, especially as it pertains to housing and rates. This past week was no sleeper as the Federal Reserve raised rates for the 10th time in a row over the past year. Let's jump into some of the details and figure out what this means for us on Main Street. The big question everyone is asking, is this the last hike? As we expected, the Federal Reserve raised the federal funds rate to a range of 5 to 5.25%. Now, remember, this is the interest rate that affects short-term loans like credit cards, autos, and home equity lines of credit, not first mortgage rates directly. When the Fed statement was released, the markets believed that the Fed was signaling a pause by omitting the following line from the previous statement, quote, "The committee anticipates that some additional policy firming may be appropriate." However, shortly after the statement was released, Fed Chair Powell hosted a press conference, and right at the top, he said that Fed members have not discussed a pause in rates. Bottom line, expect more uncertainty and volatility in the weeks to come. Sound and resilient. This is the term Fed Chair Powell used to describe the banking sector. Unfortunately, we are seeing more banks with issues. To start the week, it was First Republic being taken over by JP Morgan Chase. As of Friday, PacWest Bank was said to be exploring strategic options. The fear of banking contagion has elevated uncertainty in the financial markets. It's not clear if and how many more banks will continue to have issues. Bottom line, this fear has created a safe haven trade into bonds, with prices being bid up and rates edging lower. European Central Bank hikes by less. The European Central Bank, or ECB, hiked their benchmark rate by 0.25%, the smallest since the start of their hiking cycle. Like our Fed, they too are signaling they would be data dependent going forward. So what does this all mean for us right now? The Federal Reserve is sending mixed messages on the future direction of rates. Meanwhile, long-term rates, which the Fed doesn't control, are near their best levels in months, with the market sensing that all the uncertainty in our economy will prompt the Fed to pause and potentially cut rates later this year. The incoming inflation and economic data and issues in the banking system will determine what happens next. Looking ahead, expect the volatility that we saw this past week to continue. The Consumer Price Index, or CPI, which measures inflation, will be reported on the 10th. If this number comes in higher than expected, rates could rise, with the opposite being true. Despite this being a backward-looking number, we will have Fed officials continue to speak and comment on the release and how they feel it impacts the Fed policy and interest rate decisions. Now let's go ahead and take a look at the charts and see how this is all impacting us when it comes to interest rates. So if we go here to the Fannie Mae 5.5% coupon, this is what interest rates are being packaged up as they get ready to close and move on to the secondary market. Green days are good, red days are bad. We want to see this movement or direction in interest rates. As you can see, we are off some of the highs in interest rates here recently, and now breaking above and holding at the 200-day moving average. This is what we want to see hold. If we can see the CPI report maybe come in a little bit lower, that will help us hopefully maintain this as the line in the sand, and will be a great spot for interest rates to improve further from. That 200-day moving average is a formidable barrier. You can see we have not convincingly been above the 200-day moving average all the way since October of 2021. Well, I appreciate you spending some time with me on this. Hopefully this is helpful. Look forward to sharing more information in weeks to come. If you have any comments or have any questions, feel free to reach out, comment, email, text. I'll look forward to being of help. Enjoy the day.